Modern enterprise resource planning systems process millions of transactions per hour. It is a constant, high-speed flow of digital capital moving through rigid pipelines. This creates a specific tension. Organizations today possess more operational data and heavier internal control matrices than at any point in history, yet systemic financial misconduct remains highly successful. The vulnerability lies in the method of detection. Traditional fraud reviews still rely on random sampling and the manual inspection of physical or digitized documents. This diagram illustrates exactly where legacy reviews fail. Look at sampling limitations and threshold blind spots. When a reviewer only checks a random fraction of the records, they are mathematically likely to miss dispersed, low-frequency schemes. Modern perpetrators hide in the volume. The sheer density of legitimate, everyday transactional noise provides the optimal camouflage for illicit activity. Compounding this is threshold thinking. Auditors are trained to search for massive, singular anomalies, which blinds them to smaller threats that accumulate over time. Traditional audits fail because they search for obvious, localized errors within systems that fraudsters actively use to disperse and hide their tracks. Modern fraud has moved past crude falsifications, like forged signatures or missing files. It operates through synthetic legitimacy, the practice of ensuring every illicit transaction appears formally compliant on paper. That actors map an organization's internal control matrix. They learn the exact routing and approval rules, and then use that logic against the system itself. When compliance teams rely on form over substance, they create a massive structural vulnerability. A correctly formatted invoice template and a valid approval timestamp generate false confidence. The reviewer sees a complete checklist and clears the transaction. Defeating this requires abandoning isolated exception checking. The focus must shift to full population, pattern-based behavioral testing. When every individual document looks legitimate by design, proving fraud requires identifying the abnormal behavioral logic connecting those documents together. Automated control environments are highly predictable. They rely on hard-coded value limits to trigger escalation or secondary reviews. This predictability enables threshold exploitation, a tactic where illicit disbursements are deliberately sized to remain just below those automated radar lines. This scatter plot charts normal invoice values over time in a standard procurement environment. The red line indicates a strict $50,000 managerial approval limit. To extract a massive payout, a fraudster breaks the sum into microtransactions, clustering densely right at $49,500. To evade velocity alerts, these micro-variations are temporally spaced. They are distributed across different financial quarters to avoid algorithmic red flags entirely. Severe economic damage in digital environments is rarely caused by a single massive breach. It is driven by the undetected accumulation of mathematically precise microtransactions. Transactions are only one layer. To find deeper schemes, we have to look at the underlying reference architecture, the master data. Deep within the ERP are dormant vendor accounts and inactive employee profiles. These neglected records are highly vulnerable. This graphic outlines the hijack and restore tactic. Perpetrators temporarily alter the bank routing numbers on dormant accounts right before a massive payment cycle executes, and then switch them back immediately after. Standard ledger audits miss this entirely. The subsequent transactions look clean because the foundational reference data itself was poisoned before the payment was processed. This danger is compounded by process fragmentation, where business functions operate inside siloed, disconnected software platforms. Fraud thrives in the blind spots between these systems, places where human resources data, physical attendance logs, and automated payroll execution fail to reconcile. Securing the transactional layer accomplishes nothing if the underlying master records and siloed architecture provide a safe harbor for manipulation. The foundational audit assumption of maker-checker security is that one person verifies the work of another. However, single-actor overrides are increasingly rare. Networked collusion neutralizes standard control matrices. When co-conspirators mutually validate each other's actions, the paperwork will always appear flawless. To unmask collusive networks, investigators use entity resolution, an analytical method for detecting hidden relationships across completely disconnected datasets. Consider this scenario. Here are 3 legally distinct, formally compliant external vendor profiles operating within the procurement system. When we strip away their superficial corporate identities to analyze the underlying operational metadata, the reality shifts. All 3 share the exact same IP address, a slightly misspelled physical address, and route to the same bank branch. By matching this resolved vendor metadata against internal employee records, we expose the collusive network, linking the external vendors directly to the internal approver authorizing their payments. Modern fraud is a networked activity. It only becomes visible when isolated, formally compliant data points are algorithmically forced to connect. Detecting an anomaly is only the first step. The real challenge lies in the process of proving the misconduct actually occurred. In forensic work, a high Z-score, a statistical outlier, or a visual cluster is an indicator, not evidence. Every indicator must pass through a mandatory phase of rigorous testing against alternative explanations. Many legitimate operational noises mimic fraud, end-of-quarter seasonality, data migration errors, or urgent management overwrites can all generate identical statistical red flags. As this graphic illustrates, raw data must be contextualized. Proving action over intent requires combining transactional data with external documentation and contextual business intelligence. Independent strands of evidence, like timestamps, vendor links, and policy breaches, must physically converge to eliminate the possibility of innocent coincidence. An anomaly merely asks a question. Defensible evidence is the heavily corroborated, tested answer that survives the elimination of all innocent explanations. The ultimate stress test for any forensic finding is hostile cross-examination by opposing experts during litigation. Surviving that intense scrutiny requires absolute traceability, an unbroken chain linking a final accusation back to the source system. Let's map this backward, starting at the top with the final analytical finding. The analyst must document every step, logging data transformations, SQL joins, and filtering rules. This chain of custody travels all the way down, anchoring permanently into the immutable ERP system record. This creates the standard of reproducibility. If an opposing expert using your exact parameters cannot recreate your exact result, the evidence collapses in court. This redefines the modern forensic professional as an evidential architect. Their role centers on engineering data specifically to withstand the highest levels of legal scrutiny.